Hello, trading is closed on February 12th, 2018. My last call said the most likely thing was a gap outside of Friday's range. I said if we went higher, even by 0.01, it should be positive on the day, but if we gapped under the low, we could have a crash. Well, we went up. During the day, MEJT said early on we should ultimately trade lower, but it also predicted optionally we would recover to this dashed line, which we did. Note the support at the line. In the afternoon, it said ultimately higher prices would print, but that when they did, it was a false move and prices would return and undercut this line, which they did, and there was the support. I don't have any new targets for tomorrow. I'd been thinking that we could have a rally. This was my price target for the upside. The downside, we had a MEJT target we'll have to add to the list. I said there was an increased risk it would fail, which it did. Although I thought we had a shot at this, this is weak action today, and unless we invalidate it by gapping and promptly taking out this high, it's possible this is all she wrote for the recovery. First of all, we left a few targets behind. We left this price target behind. Here is a hole in the wall gap. These things typically fill, usually quickly. This low here is 26.12, so it implies we're going to see 26.12 usually within a day or two, but not always. It's possible this is an ABC up. If that's A and that's B, there's your C pretty much right at the Fibonacci target, but that's not all the resistance we have at this high. I'll come to that in a minute. When you gap up, rally all day, can't hold on to any of these highs, and since we traded under this high with less than 5 minutes left, as far as I'm concerned, we didn't clear that one. It's a failure of the gap. It can be invalidated if we gap up and take out the high, but otherwise it leads to lower prices. Here's the daily chart with the demarked TDST lines. These lines are support resistance levels, and it goes to a bar past the line. Look how we found support, a bar under this line, rallied right to the line within 1 point and then stopped. So we have a straight line rally to resistance. We either gap over it or the resistance wins. Here's a monthly chart. We'll start with the TDST line, go to the all-time high. These bars are monthly bars, but look how perfectly they line up with these Fibonacci price levels. Look how this stopped right on the Fibonacci price level. So we have resistance at 26.83, but if, as I believe, this is a major high, by next month, if not sooner, we should see 24.30 right there. Here's the last leg up. It's a clear 5-wave pattern. You draw your Fibonacci grid. We're playing Fibonacci ping pong in between the 38.2 and 61.8% levels. We might dilly-dally around here a bit, but there's a good chance we're coming down to this level, which is 23.51. Well, this was the count we had. We had some nice Fibonacci ratios. If that's wave 3, you can see how wave 1 is 23.6%, and wave 5 would be 78.6, but that's not the only way to count it. This could be an ABC. If you use the alternate count, and that's A, That's close enough for me. This could be an ABC pattern, in which case we start down right now. This inability to hold on to these highs is not good. Now, tomorrow should have an early low and a late high. The pattern has a tendency to rally into the close and end positive. Usually, if that's not going to happen, you're going to have a drop typically in the first 1 to 2 hours, a pretty steep drop. So it's going to give us a clue for how we open tomorrow. If we gap up, overtake the highs, I think there are still higher targets. But if we have a steep drop early on, I think we should see 26, maybe not in a day, but we should see 26.12, 25.50s. I think we could go into the 2400s and even the 2350s reasonably quickly if we start off very weakly tomorrow. So if you want to get more on the upside, you want to get it early. Otherwise, the drop could resume again in full force. And that's today's call.